Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 17th of February 2020, so yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, a few interesting setups. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also, just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, I believe you can find a lot of useful information here for yourselves, guys, so feel free to visit us on jfdbank.com and click on the research tab right there. Now then, let's jump into the charts. Now the first one I want to touch on here is the S&P 500. Now, looking at this index, and you can see that on Friday it made a push higher. Last week the index reached a new all-time high near the which was around the 3,385 territory, roughly around there. But looking at the cash index right now, we can see that yes, basically the price is currently balancing not far from here, not far from this all-time high. The cash index did create a new all-time high, so but let's see how this is going to open up today. For now, as I said, for now it's very interesting to see, because like I said, the price is currently balancing not far from this all-time high, but this main all-time high, let's put it that way. But for now, of course, given the fact that the coronavirus is, let's say, getting out of hand a little bit, so let's see if this kind of actually weighs in the negative way on the indices, and in a way, if we do see a bit of a drop lower here, we may see, maybe we may go for a bit of correction, a deeper correction. Don't get me wrong, but overall we're still trading above this upside support line taken from the low, the 3rd of October. So in a way, even if we see a deep dive here, maybe towards the 3,293 territory, still all this could still be seen as a temporary correction before another leg of buying. Of course, that said, let's for now not over speculate on this one too much. Let's probably mainly focus on some key support and resistance levels. So basically, looking at this picture here, looking at the technical picture, if we start seeing the price falling below the 3,348 territory here, then, well, I mean, we could consider a move lower here, the deeper move to the downside, which I've talked about. And because at the same time, if we see it drop below this 3,348, then this would also place the price below its 21 EMA on the 4-hour chart. So in a way, this is where the bears could start joining in. With the upside, in case this decides not to travel lower, a push above the Thursday's high, a push above Thursday's high could do the trick here for more buyers, and we could see, of course, the index entering the uncharted territory. Don't get me wrong, we do have the nice, beautiful number of 3,400 on the way here, so in a way it could be an interesting area for a test. But again, for now it's difficult to talk about any like higher levels, any targets here, because this is still an uncharted territory for the index. So anything above the 3,385 zone is an uncharted territory. For now, basically, long story short, guys, for now, keep your eyes on the 3,348. A nice good drop below this could in a way lead towards slightly lower levels. Don't get me wrong, we're still going to be very careful with the downside, because for us to get a little bit more comfortable with further declines, or should I say, if the downside could be back on the table is only after a break of the 3,268 zone right here. So that's why for now we are, even if we see a bit of a decline, still could be a temporary correction before another leg of buying. Gold, I've looked at this one this morning, and basically I was telling you guys to keep a close eye on these two lines. So two short-term ones. One is an upside one taken from the low of the 12th of December, and the other one is a downside one taken from the high of the 7th of January. So as you can see, it's closer to this downside line. So in a way, it continues to knock on the door here. Even if it gets a break here through this downside line, still for us to get a little bit more comfortable with higher levels, ideally a push above the 1594 territory, which is near the high of the 2nd of February, or in other words, near the highest point of February, current highest point of February. If we get a break above that, this is when we will aim for higher levels, because even if we do get a break of this downside line, still, to get a little bit more comfortable with the upside, further upside, a push above this barrier would be required, and then we could aim for the highest point of January. In terms of the downside, now what I've mentioned this morning as well, that in a way what we would be looking for would be, let's say, a break of this upside line, this upside line taken from the low the 12th of December, and then a drop below the 1561 zone, which is the low of the 12th of February. Now that said, still, even if it drops below this, there is a 200 EMA here on the 4-hour chart, which kind of could provide some support here as well. So that's why ideally we would prefer to see a drop below the 1547 zone before targeting lower areas. And still, again, as I've mentioned this morning, the downside might get limited near this medium-term upside support line taken from the low the 26th of November. So something to keep an eye on. But of course, it seems that the downside could be slightly off the table for now, but that is, of course, if this downside line gets broken. If it doesn't, then, well, I mean, we could see a drift lower here, and all eyes then are on this short-term upside support line taken from the low of the 12th of December. WTI oil. Now, with this one, I talked about this one last week, and I was telling you guys to keep a close eye on this barrier, the 52.15. As you can see, this is where it's currently getting held at, and we need to see a nice, good, strong move above this before considering higher levels. Previously, we saw the commodity kind of drifting lower, trading below this downside line taken from the high of the 7th of January, and then on the 5th of February, the commodity managed to break this one, traveled a little bit higher, but failed to push above this 52.15 zone, the one that is currently getting the one that's currently holding the price down. We need, like I said, we need to see a nice good push above it, and in addition to that, you can keep an eye on this 100 EMA here, shown as the green line. So keep an eye on this one. If we get a nice good strong move above it as well, then yep, this could open the path towards the 54.35 zone, which currently coincides with the 200 EMA on the 4-hour chart. In terms of the downside, now, although this could drift lower, we could examine one of these levels here, but to be honest, ideally we would prefer to see a drop below the 49.30 zone. This way, the commodity would confirm a forthcoming lower low, and the previous trend, the previous downtrend could resume, because for now it's all kind of moving sideways a little bit here. So that's why even if we'd see a drop lower here, let's say below the 51.46 zone, something like that, then, well, I mean, still the this could, yeah, it could move a little bit lower, but don't forget that for now we're stuck in a little range here, roughly between the 49.30 and the 52.15 zones. So that's why we would preferably like to see a drop below the 49.30 before kind of, let's say, resuming the downtrend and resuming the examination of the downtrend. There we go. AUDUSD. AUDUSD. So this one is a very interesting pair as well, and I've talked about this one last week, and I was telling you guys to keep a close eye on this key area of support near the 0.6668 zone, and of course this downside resistance line taken from the high of the 1st of January. As you can see, this downside line continues to hold, but if we get a break of that, then yes, we could consider an upside here, but ideally we would prefer to see a push above the 0.6774 zone, which is the high of the 5th of February, or in other words, the current highest point of February. So in a way, even if we see a push, a good strong push above this downside line, still ideally, just to get more comfortable with higher levels, a push above the 0.6774 zone would be needed, and then we could aim for higher levels. In terms of the downside, we're waiting for a good drop below the 0.6668 territory before considering further declines, because this way the pair would confirm a forthcoming lower low, and yep, we could aim for further declines. But again, for now, it's a bit of a waiting game here on this pair, and all this territory here is somewhat of a neutral one for us. We're not going to do anything for now. Like I said, we need some confirmation breaks before we could examine a further directional move. GBPUSD. Now, GBPUSD, of course, is quite interesting. Now, previously, when I looked at GBPUSD, I was talking about this upside support line, a bit of a tentative one, but nevertheless an upside line taken from the low of the 3rd of September. And as you can see, this line got violated, so we're no longer interested in it. But to be honest, let me actually clear out this chart in general, and we can have a look at have a fresh start on this one. So a fresh look. Basically, as you can see, for now it's kind of moving sideways here. It's not a lot of activity, let's put it that way. It's roughly stuck between the 1.2878 zone and let me just put this one on the chart as well, and basically it's roughly stuck below this. There we go. Oh, there we go. So the 1.3284. Now I do understand it's quite a big range here, but from the very short-term perspective, now this little formation that's happening right now here, in a way somebody might say that this could be a nice bullish flag that's forming out here. So we do have our nice pole here, and we are seeing a bit of consolidation here, so could be a little flag formation, a bullish flag formation, which in a way, according to textbooks, tends to break to the upside basically in the direction of the prevailing trend. So in this case, like I said, the bullish flag could here pop to the upside, but before we could consider that, just to be on the safe side, guys, wait for a push above this 1.3070 zone. As you can see, this is the area, this is that strong area of resistance, which kind of is keeping the rate down. So that's why we're going to wait for a push above this, although we could be maybe seeing this seeing this one here as a nice bullish flag. Still, we need to see a nice good pop above the 1.3070 zone before kind of we could get excited about higher levels, slightly higher levels, because don't get me wrong, we do have a bunch of data coming out this week from UK. So something for you to evaluate, something for you to keep an eye on. Check out economic calendars, and yep, watch out for those. So the first good set of data will be coming out tomorrow, so keep your eyes on this pair then as well. So for today, it's just kind of moving quietly. Not much activity, but we can see that also here we're stuck above this little short-term tentative upside support line taken from the low of the 10th of February. So in a way, for now, everything's kind of working out nicely here in terms of this idea of a potential bullish flag. But as I said, guys, we need to see a nice good pop above this 1.3070 zone before we could examine the upside. With the upside, if we do get this pop, then we will target the high here, the high of the 31st of January near the 1.3210. In terms of the downside here, if we do get a drop below this upside line, and if we do get a slide below this little territory, the 1.2942, then yes, we will consider further declines. For now, it is kind of still hanging in there, but for to get a little bit more comfortable with the upside, we need to push above this 1.3070. USDJPY. Now, I looked at this one last week and basically continues to move sideways, and this is what I was talking about last week when I was covering this one. Basically, I was telling you to keep a close eye on this 109.65 zone, because we keep getting breaks here and overshoots, but still no close, at least of a 4-hour candle here below this level. So in a way, we need to see something like that, at least something like that, in order to start considering some lower levels. But don't forget that even if we see a slide lower here, still this move to the downside could be part of a deeper correction before another leg of buying, because overall we're still above this upside support line taken from the low of the 25th of August. So something to consider, guys. But again, from the short-term perspective, we're keeping a close eye on this level here, the 109.65. We need to get a nice good break here below this before considering further declines. In terms of the upside, which is pretty straightforward. We will aim for higher levels if we get a push above the psychological 110 zone, or even better, the 110.1314 area, which was basically the highest point of last week, and then we'll aim for the upside. And of course, finally, the euro dollar, as always. Now you can see that there is the pair is getting a hold up near this 1.0826 territory. I've talked about this one this morning. I've talked about this pair this morning, and basically what I was saying, that in order for us to consider further declines, of course, we would like to see a drop below this, the low of last week near the 1.0826. Of course, don't get me wrong, it's still trading below this short-term steep downside resistance line taken from the high of the 2nd of February, but just to get that extra confirmation, a drop below this 1.0826 territory would be ideal for the bears, and we could then target the 1.0777 or even below that. But again, for now, we're kind of playing the waiting game here. We're waiting for a breakthrough one of our key levels, and on the upside would be this level here that we would be looking at, the 1.0878 zone, because if we get a break of this downside line, the steep downside line, then we might start considering higher levels. But just to get a little bit more comfortable with higher areas, a push above the 1.0778 zone could do the trick here, because that's basically the lowest point of 2019. It may act as a good area of resistance, initial area of resistance, but as I said, if we get a nice good pop above this, then in a way this could lead towards some higher levels. But of course, don't forget that overall we are still trading below this downside resistance line taken from the high of the 31st of December, and in a way, guys, this move higher could be limited near this downside line. But of course, this is something that we will review if we get a push above the 1.0878 zone. So keep your eyes on that one. Okay, guys, so I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.